So you had planned to build your high-end FF91 electric vehicle in California and actually start delivering to customers later this year. So what has the impact of the pandemic been, and how has that potentially pushed back plans?
Yeah, first of all, Selina, thank you for having me here. It's a pleasure for me to talk to you here. It's the first time for me to do this in this format via Skype, to be honest, but these are special times. So, yeah, we always had the plan to launch our vehicle 9 months after our B-round funding is closed and coming in. And this is still the plan. We stick to this plan. Obviously, we are impacted, like any other company as well, a little bit by the virus situation. So the funding process is a bit delayed because of our partners have to deal with their own issues. But in principle, we still have the plan. And the good thing is the hardware work on the 9.1 is mainly done. And it's more software what we have to do now and testing. And this can be done in a home office environment as well. And just to share this, I'm personally using an FF91 on a day-to-day basis now since some time, just to experience it under real customer conditions, and that's a great experience.
But Carsten, how much more capital do you need, and who are you talking to for potential funding?
So the overall amount of money we still need to reach an IPO is around $850 million. This didn't change. And we are going to implement this capital raise in different steps. So the first step is to launch the 9.1, as I said, 9 months after we get funding. In parallel, we are already working on the second product, which is called FF81, and we want to bring this to a pre-production status. So this $850 million will bring us all the way to an IPO, which we envision to be between 12 and 15 months after the B-round fundraising is completed.
Carsten, have you had any talks with EV makers or global automakers to sell your EV platform or collaborate with them? It was reported late last year that there were discussions with Fiat Chrysler.
Yeah. So actually, this is a very good point. If you look to the financial markets right now, I think this is not a secret, the whole environment for electric vehicles has cooled down a little bit. So it's much more difficult to get capital from pure financial investors, let's say. But the good news is there's a high pressure in this whole industry for all the automakers. And this even increased now with the virus situation, because the business of traditional car companies is going down right now. They have huge losses. The business model comes under pressure. But the regulators are still driving electric car technology. So there's a big chance to partner with companies like ours, having this technology, being able to move fast. And this is why we are in talk with not only one, but several of the big car makers for potential collaborations.
Carsten, it's Rich in Hong Kong. What do you have in your technology that others do not? Do you have a USP, a unique selling point?
Yes, we have basically two groups or two sets of technology. One is, and I'm really proud that I can say this, we have the most advanced electric powertrain technology which you can get in the market when it comes to power density of the motors, for example. And more than that, the most advanced battery technology. Our battery packs 130 kilowatt hours in a car, which is good for a range up to 400 miles. It's a flooded cell technology, which allows you to charge extremely fast with 200 kilowatt and more. And that's a technology which is not available in the market right now. And the other area, and this is why this is a strength of Faraday, combining the traditional auto world with internet and consumer electronics world. We have a technology set we call IAI, which is Internet and Artificial Intelligence. This is a whole set of communication modules, high-speed communication modules, screens, very powerful in-car computers to have a complete internet and consumer electronics technology in the car. And both of those technology sets are of interest for traditional car makers.
Absolutely, Carsten. So that brings me to my next question. Can you survive on your own? Do you have to do a deal with somebody else to have the critical mass to take all that technology forward?
I would say we could survive by our own because we have a long-term business plan, a very detailed one over the next 10 years. And assuming that the funding can get done, this company can develop, can not only survive by itself, but can create a very sustainable business and a very valuable business. On the other hand, there is a clear chance for cooperation and collaborations, and there's a strong need. And I always was a fan of not, like we say in German, not reinventing the wheel all the time. So there are a lot of technology areas where it absolutely makes sense to work together, to bundle investments, which will make you faster and save cost. And then derive your own products based on common technology. This is the reason why we talk to those parties, and the talks are going quite well so far.
And Carsten, with the current state of U.S.-China geopolitical tensions and the fact that those are the two locations where primary operations are based, how have you been impacted by the geopolitical tensions?
Not too much right now, I have to say. We have a clear dual market strategy for the US and for China, but it's quite well separated right now. So we are a California-based company. Our headquarters is in Los Angeles. We have all our R&D marketing team here based in Los Angeles. We have a plant in California here in Hanford, halfway between Los Angeles and San Francisco, where we are going to build the first units of a 9.1. It's not a very high volume plant, but we can do up to 30,000 cars a year. So we are good to start to launch the car for the Western world and even export some of them to China from here. On the other hand, we have a clear market entry strategy for China, which is not coming up with an own plant, not starting everything from scratch. We are looking for a joint venture partner in China, basically having the approach that making use of investments done, capacity available in China, which will be brought in by the partner, and bringing our technology and our products into such a joint venture, and then going from there, which will make us much faster and will allow us to scale faster in China. And we are discussing with several OEMs in China such an approach as well, which is progressing quite well as well.